Welcome to the world of Test Portfolio XSX. This video was created with the help of artificial intelligence. It provides a weekly summary of key economic events. The featured portfolio is simulated, fictional, and reflects my personal perspective on recent market developments. My main goal is to explore whether the S&P 500 can be outperformed. To do this, I compare the performance of three different portfolios: my own fictional portfolio, an S&P 500 portfolio built using a lump sum investment strategy, and an S&P 500 portfolio built using the dollar cost averaging method. This video reveals which strategy performs best and why. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur. Ready to get started? Let's go. The standout day of the week was Monday, when news of the US-China tariff reduction agreement sent all three major indices soaring by over 2%. On Tuesday, the tech sector continued to drive gains in the Nasdaq while the Dow weakened due to a drop in healthcare stocks. Wednesday saw the tech rally continue, marking the Nasdaq's sixth consecutive day of gains. Thursday was more muted. The Nasdaq slipped slightly, while the other indices posted modest gains. On Friday, markets gained fresh momentum, closing out the week with strong gains, mainly driven by the tech and AI sectors. Portfolios bounced back, and it was tech that really shined as the week wrapped up. Overall, the S&P 500 finished the week up 5.3%, the Nasdaq climbed 7.2%, and the Dow Jones rose 3.4%. You'll see these numbers reflected in the upcoming portfolio performance monthly and year-to-date charts, making it pretty clear just how the markets performed this week. This week's highlight is the US-China tariff agreement and the resulting trade surge. The United States and China announced on Monday that they had reached an agreement with surprising speed and depth to temporarily reduce tariffs. The United States reduced tariffs on Chinese imports from 145% to 30%, while China reduced tariffs on American products from 125% to 10%. The agreement is valid for a 90-day period, but both sides indicated that this mutual easing could serve as a trial period toward a longer-term trade arrangement. Let's look at the impact on the economy. According to the Freightos Baltic Index, container shipping prices from China to the U.S. West Coast increased by 40% in the first half of May. The volume of Chinese container bookings jumped by nearly 300% after the announcement of the agreement. The ports of Los Angeles and Long Beach are projecting a 15 to 18% increase in volume for May compared to April. And here's the interpretation. This sudden and strong upswing has not only energized the logistics sector but was also clearly felt in the stock markets, especially in the share prices of companies producing technology and consumer goods. Trump's new tariff strategy combines agreement and threat. While there was a notable easing with China, President Donald Trump took a tougher stance toward other countries. He announced that within 2 to 3 weeks, new tariffs would be introduced against several countries. According to the White House, each affected country will receive official notification of the new tariffs. The goal, as stated, is that every country must pay if they want access to the American market. This unilateral move could lead to significant geopolitical tension, but due to the pragmatism shown toward China, markets have so far reacted positively. We'll see what the new tariffs will be. Inflation data is showing some easing pressure. The consumer price index is up 2.3% year over year, which is actually the lowest figure we've seen since 2021. Meanwhile, the producer price index fell by 0.5% month over month, marking the sharpest decline since 2009. As a result, the likelihood has increased that the Fed will cut interest rates in the second half of the year, especially if economic activity also starts to weaken. The yield curve has pulled back, the dollar has weakened, and stock markets have risen. Industrial production stagnation, but a distorted situation. U.S. industrial production stagnated in April, holding steady at 0%, and manufacturing actually shrank by 0.4%, which is, contrary to the expected mild expansion. But why is the market not panicking? Well, the figures reflect the pre-agreement phase of the trade war, when punitive measures were still in effect. Companies held back on orders and waited, mostly due to uncertainty. Now that the agreement has been reached and container traffic has surged, a rapid restart of production is expected. Interpretation. This is an important but non-predictive data point. The real direction will be shown by the figures for May and June. India-USA duty-free trade agreement, Trump's announcement, and India's reaction. On May 15th, President Donald Trump announced that India had offered the United States a trade agreement under which virtually zero tariffs would be imposed on American products. According to Trump, this represents a significant step forward in trade relations between the two countries. However, the Indian government responded cautiously. Foreign Minister S. Jaishankar emphasized that negotiations are still ongoing and nothing has been finalized. He stated that any trade agreement must be mutually beneficial to both parties. Interpretation. While Trump's announcement is a reason for optimism, no final agreement has been reached yet, and the outcome of the negotiations remains uncertain.
Weekly earnings reports, and let's start with retail. Walmart, ticker symbol WMT, reported results this week. The company posted revenue of $165.61 billion and earnings per share, or EPS, of 61 cents, which actually exceeded analyst expectations. The market reacted pretty positively, with the stock price rising by 2.3% after the report. Now, moving on, let's talk about Foot Locker, Florida, and Dick's Sporting Goods, DKS. Dick's announced a $2.4 billion acquisition of Foot Locker. The market reaction was, well, pretty dramatic. Foot Locker shares rose by 86%, while Dick's shares dropped by 15% following the announcement. Next up is healthcare. United Health Group, UNH, faced a challenging week. The company is under several investigations, including a US Department of Justice probe over suspected Medicare fraud. The market didn't take the news well. United Health stock fell by 18% on Tuesday, and then dropped another 11% on Thursday, partly due to the unexpected resignation of the CEO. Finally, let's take a quick look at communication services. Fox Corporation, Fox, and Foxa reported their earnings. Fox had earnings per share of 96 cents, and Foxa reported 93 cents, both of which were lower than the same period last year. As for the market reaction, there's no available information on the stock price impact at this time. All right, let's move on to the technology sector. First up, Applied Materials, ticker symbol AMAT. So the company actually exceeded analyst expectations, but they issued a weak revenue forecast. As a result, the market reacted pretty negatively. The stock fell by about 5.3% after the report. Next, we've got Monday.com, ticker MND. The company reported $282.3 million in revenue and earnings per share of $1.10, both coming in above analyst forecasts. Still, the market wasn't too impressed. The stock fell by 1% after the report. And finally, Cisco Systems, ticker CSCO. The company reported $14.15 billion in revenue and earnings per share of 96 cents, both exceeding analyst expectations. This time, the market responded positively, with the stock rising by 2% after the report. So, let's talk about biotechnology. Novo Nordisk, ticker symbol NVO. The company announced that CEO Lars Fruergaard Jorgensen is stepping down and at the same time lowered its revenue forecast for 2025. As a result, the stock dropped by more than 5% following the announcement. Moving on to the entertainment industry, Take-Two Interactive, ticker TTU. The company issued a lower-than-expected revenue forecast for the 2026 fiscal year and also delayed the release of Grand Theft Auto 6. After this report, the stock fell by 2.4%. Now, let's check in with the industrial sector. Deere & Company, ticker DE, reported net revenue of $11.171 billion for the second quarter. There's no available information on how the stock price reacted to this, though. Shifting over to utilities, NRG Energy, ticker NRG, reported earnings per share of $1.80, which is a 125% increase compared to the same period last year. Again, there's no available info on the stock price impact for this one either. This week's earnings reports showed a mixed picture across industries. The retail sector, for example Walmart, delivered solid results, while acquisition news from Foot Locker triggered some pretty extreme price reactions. The technology sector and healthcare sectors brought more negative surprises. Overall, though, broader market sentiment was improved by easing trade tensions and favorable inflation data.
The lightning-fast weekend deal between the United States and China changed everything. At best, I expected some positive news, like progress in the negotiations or partial agreements. But I didn't expect the weekend to end with concrete results and mutual concessions this quickly. Did you see this coming, or did you have a different scenario in mind? As I mentioned in earlier videos, I had been observing the events from the sidelines, but this surprising turn pushed me to bring forward some of my planned purchases in the fictional portfolio, specifically on May 12, 2025, at market close. In a short video on Monday, I even hinted that I had made significant buys. In response to a comment, I clearly stated, the semiconductor sector was my target. Why this sector in particular? While the stock market jumped on the news, the tech sector has underperformed year to date, especially chip makers, even though they led the market last year. The Philadelphia Semiconductor Index, or SOXX, reflects this clearly. In my view, the long-term outlook for the chip industry is strong. Tariffs were just one risk factor. Another equally important issue is export restrictions. For example, the NVIDIA H20 chip was designed specifically for the Chinese market, but had to be redesigned with lower memory bandwidth to comply with new regulations. Meanwhile, Huawei is seriously trying to reclaim market share in segments dominated by NVIDIA. AMD's earnings report was positive but only hinted that the impact of export restrictions will be detailed in the next quarter. Intel's situation also deserves special attention. For me, it could be one of the dark horses of the year. If the manufacturing transition succeeds, new government orders arrive, or competitors like AMD or NVIDIA encounter unexpected problems. For example, production issues, Intel could become the surprise of the year. This sector is risky, but right now, I believe one thing is certain, that nothing is certain. The environment can shift in just a few days. In the next video, I'll take a closer look at the current situation of the major chip makers used in the field of artificial intelligence, Intel, AMD, and NVIDIA, and dive deep into NVIDIA's upcoming earnings report. And now let's take a look at how my fictional portfolio changed during Monday's major rally. Just before market close, I made significant purchases, focusing specifically on companies that are part of the Philadelphia Semiconductor Index, or SOX. Interestingly, for example, SMCI surged massively in the meantime, but since it is not a component of SOXX, it wasn't included in my analysis and I missed out on it. First, I examined companies that were year-to-date underperformers and were considered losers of the trade war so far. That alone considerably narrowed my scope. Then I reviewed the earnings reports of the remaining companies and, if available, also looked at analyst expectations and consensus price targets. I excluded companies where the stock price had already, in my opinion, risen too far above the target prices. Even though I believe those targets could still move higher, I'm not willing to buy at overvalued levels. So, this is how the final list was formed. Only a narrow slice of the 30 SOXX components remained, 10 stocks. In addition, I considered the index weighting, proportioned accordingly, and, yeah, I made sure to only buy whole shares, not fractional ones. Here's how the portfolio looks now and, well, how I responded to the US-China tariff deal. On May 12, 2025, I executed the following transactions. NVIDIA Corporation, ticker, NVDA, 26 shares at $123 each, for a total of $3,198. Broadcom Incorporated, ticker AVGO, 13 shares at $221.58 each, totaling $2,880.54. Advanced Micro Devices Incorporated, ticker AMD, 26 shares at $108.12 each, totaling $2,811.12. Marvell Technology Incorporated, ticker MRVL, 19 shares at $64.50 each, for a total of $1,225.50. On Semiconductor Corporation, ticker ON, 23 shares at $44.62 each, totaling $1,026.26. Teradyne Incorporated, ticker TR, 10 shares at $83.06 each, totaling $830.60. Entegris Incorporated, ticker ENTG, 9 shares at $82.39 each for a total of $741.51. Taiwan Semiconductor Manufacturing Company Limited, ticker TSM, 8 shares at $186.98 each for a total of $1,495.84. Onto Innovation Incorporated, ticker ONTO, 2 shares at $93.49 each, totaling $186.98. And finally, MKS Incorporated, ticker MKSI, 3 shares at $90.75 each, for a total of $272.25. On the next images, I'll present as usual the details of the purchases. And the current state of the 3 portfolios: strategy, lump, sum, one-time investment. This investor bought the full $15,000 worth of S&P 500 ETF on a single day, January 2nd, 2025, and has been holding it ever since without adding or withdrawing. Strategy, dollar cost averaging gradual investment. The second investor also invests $15,000, but in 12 monthly installments of $1,250 on the second open trading day of each month. This method smooths out market fluctuations and can reduce timing risk. Strategy, my fictional portfolio. This portfolio is based entirely on my own decisions. I began investing the full $15,000 on March 19, 2025, in several rounds, selecting individual stocks. My decision-making process and stock selections have been explained in detail in previous videos. My plan is to publish a detailed comparison video at the end of the month, showing the performance of the 3 strategies so far, including the pros and cons of my patient selective approach, backed by updated data. Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.